How do the wealthy make money? The answer lies in cash flow. Greetings from the path to prosperity. Have you ever wondered how much wealth you can accumulate in a lifetime? Have you ever asked yourself, how much money can I actually earn in my whole life? Let's test your awareness for a moment. Suppose you can only make 10 billion in your entire life. Then how can you change your destiny and increase that income? If you can't come up with an answer, there's only one reason. You don't truly understand money, nor do you fully grasp Buddhist philosophy. Today, I'm going to share a few truths about the capital market. These truths may put me at odds with powerful forces, perhaps even touch the interests of certain nations. So I will speak with nuance, but enough so that those who need to understand will understand. The first thing you must carve into your mind: never dream of owning money, because in truth, money never truly belongs to you. Money always belongs to the state. What we must do is find legitimate ways to attract money into our own pockets, and then keep that money flowing, make it work for us. Once you realize that money doesn't belong to you, that's when you can start to change your fate, and from there, wealth becomes limitless. I believe many of you who've been following me for some time have already come to this realization. Have you ever noticed that truly wealthy people don't like holding cash? For example, let's say I sell some stocks today and make a profit. But if I just keep the cash sitting there, I feel uneasy. Sounds a bit like a gambler, doesn't it? In fact, the line between the wealthy and gamblers is very thin. The only difference is, gamblers use money to take risks and make bets. The wealthy use money to acquire assets and generate passive income. So why don't the wealthy like holding cash? Some might say, but don't businesses always need cash? No. The core necessity for a business isn't cash, it's cash flow. Can you distinguish between these two concepts? It's quite simple. Have you ever heard the term dead money? Money that doesn't circulate is dead money. Let's look at reality. Some parents save and scrimp their entire lives for their children. But only after they pass away is that money finally used. And by that time, the amount that could have once bought a house might now only buy a toilet. Why? Because of inflation. If you don't know how to grow the value of your money, if all you know is to save and let it sit still, then with every passing day, your money is losing value. Sounds exaggerated? Then take out your wallet and look closely at the money inside. Does it bear your name? No. It only has the name of the country you live in. So who determines the value of that money? You or the government? Let me tell you the truth, it's not you. But it's also not entirely the government. Today, I'm not going to dive into textbook theories on inflation. What I want to share is the truth behind it. I once had a conversation with a top figure in the investment banking world, a true financial shark. That conversation helped me understand how the rich turn dead money into living money, and how this world is quietly shearing sheep and harvesting unripe crops from the wallets of everyday people. As I've said, this talk may offend many. So if you find it valuable, hit the like button, because one day, this video might no longer be around. I also want to emphasize again, this channel was created to share practical knowledge about wealth building, entrepreneurship, and financial freedom. If you don't want to miss out on vital content, make sure to subscribe and turn on notifications. Now let me give you a hands-on financial insight. Previously, I've advised that people learn to use financial leverage to invest in real estate. But some asked, what if housing prices drop? What if I can't repay my debt? So let me tell you a story. It's simple, but it might help some people break through their outdated mindset. There was a bank employee. One day his son asked, "Dad, this bank doesn't belong to you. So how come you're just an employee but make so much money?" The father replied, "Go to the fridge and get me a piece of meat." The boy did as told. Then the father said, "Now put the meat back into the fridge." The child was annoyed but did it. Then asked, "Are you messing with me? Did I do something to upset you?" The father smiled gently. "No, I'm just giving you an answer." The son frowned. "All you did was make me walk back and forth." The father chuckled. "Now look at your hands. What's there?" The boy was startled and suddenly understood. I don't know if you can grasp the meaning behind this, but do you see now why the rich always borrow money? It's to keep cash flow constantly running through their hands. As long as cash is moving, profits keep flowing. But don't misunderstand me. I'm not encouraging corruption or illegal activity. What I'm emphasizing is this: what we need is the right to use money, not the right to own it. Do you know who's behind games like League of Legends or Honor of Kings? If your answer is a game company, let me ask further. Do they really make money from the game itself? Do you have to pay to play? No, these games are completely free to download, aren't they? So how do those companies make money? If I told you that these companies are essentially financial institutions, would you believe me? Let's clarify one thing. Can a business create money out of thin air? Legally, no. But think about it, what is money really? From the very first lesson today, I said that money serves two essential functions. First, it is a medium of exchange. For example, I have a seashell, and I use it to trade for a cow. In that case, the seashell becomes money. Second, it is a measure of value. If one cow equals one seashell, and a pig is worth 10 seashells, then the seashell becomes a unit of measurement for value. So remember this, anything that fulfills those two criteria can be considered money. Now think about your own business. Can a company create its own money? Let's look at reality. Have you ever exchanged real money for a different form of currency? Like in video games? In games, you can use virtual money to buy items, join prize events, right? So how do you get that virtual currency? There are two ways. Use real money to purchase it, log in regularly, or play for a certain amount of time to receive it as a reward. Now let me ask you, can this type of currency be used to buy things in real life? In other words, can it be converted into real money? Are there ways to exchange between virtual and real currencies? Absolutely. You see, in-game currency and real money are fully interchangeable. Not only that, game money can also be used to purchase goods. Think about bank cards and credit cards. Have you ever received reward points for using your card? Are those points considered money? At the end of the year, can you use them to redeem gifts? If you accumulate enough, you can even trade them for a house, right? Legally, this is completely valid. So what's the point here? If a business can create its own form of money, in any shape or form, and there's a community willing to believe in it and use it for transactions, is that not considered money? Yes, it is. And in reality, this has already happened. Sharp-minded people recognized this long ago. That's Bitcoin. Bitcoin was built on the same principle as many internet businesses. It only needs one thing: trust. The more people believe in it, the more valuable it becomes. In this era, if you're an entrepreneur and don't even have 5,000 followers, how are you supposed to build a community? Today, we can no longer just see customers as customers. We must see them as fans. Look at Apple, Xiaomi, Tesla, or Louis Vuitton. They don't call people buyers, they call them fans. There are Me fans, Apple fans, aren't there? So what does this have to do with you? Have you understood how trading platforms operate? At the core, they're leveraging control over cash flow. Why is it that when you deposit money onto a platform and make trades, they charge no fee, or just a small one? Because their profits don't come from transaction fees, but from the cash flow moving within the system. These companies are essentially banks, financial institutions. The only difference is the name they operate under doesn't say so. Imagine you deposit $1 million into a platform. Instantly, $1 million shows up in their system. Now imagine 1 million people each deposit $1 million. How much money is that? A staggering amount. But the important thing isn't the number. What matters is, how do they use that money? Now imagine you wake up and suddenly have $1 billion. An uninformed person would just put it in the bank and earn 2% interest per year, thinking that $20 million a year is enough. But think about it. If a financial company has a team of investment experts, how much profit can they generate from that $1 billion? This is why I always emphasize, the wealthy always look for ways to keep cash flow in their hands, then invest it elsewhere. They make money from cash flow. They use financial leverage. Do you understand now? Even if you're not a financial institution, you still need to learn how to manage your own cash flow. Don't let your money sit idle in a bank account. It becomes dead money. Because when you don't use it, someone else is using your money to make more money for themselves. If you've been patient enough to follow along until this point, you'll understand how we can use financial tools to participate in the cash flow game. Let me introduce a book to you, Fake by Robert Kiyosaki, the author of Rich Dad, Poor Dad. I've mentioned it before, but today I want to share a very important part of history from it. This part is related to the US. The striking thing is that even today, many people still don't know about it, or if they do, they don't understand how it impacts their lives, much less how to change anything. That really surprises me. If you want to become stronger, the first thing you need to do is study the strongest players. And who's the most powerful country in the world? Without question, it's the US. Why is the US so powerful? I once quoted the Rothschilds, "Give me control of a nation's currency, and I care not who makes its laws." Anyone who loves history would know that the US underwent a major turning point that allowed it to control over half of the world's wealth. It's a simple story. At one point in history, humanity used gold as the medium of exchange and the standard for financial value. When everyone believed gold had value, its worth became absolute. In 1944, 44 nations, then the most developed in the world, signed an agreement allowing only the US to produce gold. The rest weren't allowed to own it freely. Are you familiar with that period? From that moment, gold became the only global currency for trade and payment. This meant that the US could use gold to buy anything in the world. But here's the key: only the US could create gold. So the US could decide how much gold it had. And that's how it became a superpower. They mined gold and used it to buy resources, intellectual capital, and technology from across the globe. Since gold was the world's common currency, and only the US controlled it, they became the hegemon. To succeed, you must learn economics. You must understand capitalism. But the story doesn't end there. The most powerful part comes next. Have you ever wondered why it's called the US dollar? At first, trading with gold was cumbersome. So the US decided to convert gold into paper notes, called dollars. And other nations agreed. From that point on, the US dollar became the only global settlement currency, and the entire world's financial order changed. So who issues the US dollar? The Federal Reserve. Later, President Nixon announced the end of the gold standard. What does that mean? It means that from that moment on, the US could print as many dollars as it wanted, no longer limited by its gold reserves. The dollar's value now relied solely on US credibility and economic strength. But there's a catch. If too much gold floods the world, its value drops. So what did the US do? They had two choices. Mine more domestic gold. Borrow gold from other countries. If no one lent it to them, they simply kept mining, diluting other nations' gold reserves and devaluing them. Few people realize that the US has now printed tens of trillions of dollars, and the number keeps rising every second. So when I say, borrow money to buy real estate, someone might ask, what if housing prices fall? What if I can't repay the loan? What if I go bankrupt? And I just want to ask back, what if your money keeps losing value? What if the US can't repay its debt? Do you want to hold cash or real assets like property and gold? Everyone knows the US is drowning in debt. But why hasn't it collapsed like an ordinary company would? Because they hold power. Right now, everyone's talking about the metaverse, a whole new digital world. In the future, we might very well live in a completely virtual reality. And I believe it's entirely possible. Before online games, did anyone imagine people could fight in a virtual world? Did anyone think you could sit in front of a screen, connect to the internet, and team up with others to hunt monsters and go on imaginary adventures? Back then, all of that seemed impossible. But now, with just a phone, we can talk, interact on social media, and message each other anytime, anywhere. So a virtual world in the future is not so far-fetched anymore. In truth, I've imagined that scenario ever since I was a kid, probably from watching too many cartoons. I used to wonder, even if this world doesn't have Pikachu or Mewtwo, could we still join fantastical Pokemon battles in a virtual world? But I'm digressing. What I really want to highlight is this. In online games, people use a separate form of currency. So in the future, what kind of money will the metaverse use? Will it still be the US dollar? And if not, what role will the US play in that world? Feel free to leave a comment and share your thoughts. No matter what your opinion is, one thing is certain. The global money supply will continue to increase, and that means the value of money will keep decreasing. We are stepping into a new era, an age of the internet, automation, AI, and the metaverse. This is the age of data, imagination, and revolutions. Just like every economic technological revolution before, it brings with it unprecedented waves of opportunity. And you shouldn't sit on the sidelines. Take a look at the recent pandemic. It forced many industries to shift from traditional models to online ones. That shift was a stepping stone to help us gradually adapt, rather than be overwhelmed by a sudden tech revolution. Think about Jack Ma. After he created Taobao and Alibaba, what happened to traditional businesses? Countless retail stores disappeared almost overnight. Consumers now visit stores just to try things on, then go home and buy online at cheaper prices. That's how a technological revolution works. Whether it's ethical or not, history consistently proves that it's evolution. Right now, some people are quietly adapting and transforming themselves. By the time the masses realize the opportunities in the virtual economy, you may have already lost your edge. What was once a blue ocean will have turned red. I always encourage people to start businesses, but I also understand not everyone has the courage to leave their comfort zone and change their fate. I started from nothing myself. Anyone who knows me knows this well. Everything I share and teach is based on real-world experience. No luck, no empty theory. These are hard-earned lessons from years of hustle. I believe entrepreneurship is like physics. It's a science with rules and systems that can be learned and replicated. As long as you have the right tools and frameworks, you can apply them to your own situation. Now, I'm going to share the most important part of today's content. Let me be blunt. How to turn dead money into living money through finance. This is what I call intangible assets. You might be surprised to hear this, but land is actually an intangible asset. Some might object. No way. Land is a tangible asset. Everyone can see it. But let me share a secret. On financial statements, land should be categorized as an intangible asset. Why? Those who have followed me long enough might already guess. Because what you're actually buying is the right to use the land. And what is a right? It's an intangible asset. Understand? That piece of land or house you think you own actually belongs to the state. Many people don't realize this, but still rush to buy property. Have you checked whether your land use certificate has an expiration date? In this world, aside from what you eat, nothing else truly belongs to you. That's one of the greatest truths of life. It might take you some time to accept that. So from now on, don't think in terms of owning things, think in terms of how to use them. Love works the same way. Don't try to control or possess others. But here I go off topic again. Back to the main point. How to turn dead money into living money. Listen carefully. Let's say I have $10 million. I use that money to buy land under my company's name. And you also have $10 million, but you keep it in your company's bank account. You have the advantage of liquidity. You can withdraw and use it anytime. But what about your cash? It's depreciating. Because bank interest is so low, your money loses value every day. Meanwhile, I can't pull cash out of the land immediately, but if its value rises, I can do something powerful, revalue the asset. For example, year 1, land is worth $10 million. Year 2, value rises to $20 million. Year 3, it's worth $40 million. How is this increase recorded? On accounting records, the added value is counted as profit. Understand? After 3 years, my company might qualify for a stock exchange listing. Why? Because revenue has doubled every year, thanks to the land value doubling. And you? After 3 years, your $10 million is still sitting there, dead money. Some might ask, don't financial markets care about a company's real cash? They do. But what they look at above all is the financial statement. When money becomes an asset, its value is redefined entirely. And that's still not the core issue. Why do I always encourage people to start companies, to be their own boss? Because the rules of the capital market are written by capitalists. The poor have no edge in this game. Many people think billionaires like Warren Buffett pay a lot in taxes. Earn more, pay more, right? But have you heard that people like Buffett, Bill Gates, or Donald Trump barely pay taxes? Trump once said, because we're smart. Let me give you a real example. You'll understand right away. There's a businessman, I won't name him, who spent $50 million on a Van Gogh painting. The media said he bought it personally. But here's the twist. Buying under a personal name and under a company name are two completely different things. If a company buys the $50 million painting, what happens? The painting is recorded as a fixed asset. Why do this? Because fixed assets can be depreciated over 5 to 8 years. Let's assume 5 years. That's $10 million in depreciation annually. This depreciation counts as a company expense. Tax calculation is simple. Revenue, expenses equals taxable profit. If the remaining profit is zero or a loss, no tax is due. Depreciation is a legal way to reduce taxable profit and optimize costs. In other words, if this company earns $10 million annually and has $10 million in depreciation, its taxable profit is zero. And when profit is zero, no tax is paid. Get it? This is one of the most straightforward and legal ways for companies to optimize their tax. That means this company can save $10 million in corporate income tax each year. Saving tax. Isn't that the same as earning an extra $10 million per year? Exactly, because the money you would have paid is now profit. Not only that, after 5 years, the painting is fully depreciated. Its book value is basically zero. At that point, the businessman can buy the painting back from the company for $1 under his own name. Now the painting goes from being a company asset to a personal asset, while the company only reports $1 in additional profit. Do you see the point? That's why we must learn how to open companies to protect our interests and use financial strategies to optimize cash flow. Now let me ask you, how much is that painting really worth? Some say $150 million. Wrong. You're still misunderstanding what money is. A business person sees money very differently from how we understand it in daily life. So what defines the value of money in a business person's eyes? Accounting laws, financial systems, and legal regulations. I'm not showing off. These insights are rarely shared online. You probably won't even learn this in university finance or accounting classes. Because this is real-world knowledge I've learned from the titans of the financial investment world. Today, I'm sharing this with you along with my worldview. That's why, before talking about capital or finance, the most important thing is to understand the nature of money. Understanding money is critical. In different states, money takes on different values and roles. So, what else can money become? It can become something called a financial asset. And this is the key factor in determining whether you can become a billionaire. Because most companies that aim to go public use this exact method. So among all financial assets, which is the most common? Company shares. Let me ask, are shares valuable? $10 million in cash can be converted into $10 million in equity. But what's the difference? Now let me ask you, suppose we all have $10 million. What makes Donald Trump's $10 million different from ours? In purchasing power? Not much. But when it comes to equity, when a company is valued, people use methods like cost-based or discounted cash flow to determine its worth. Let's say your company has $10 million in assets and gets valued at $10 million in shares. What does that mean? In the US stock market, a share might be worth just $1. Still not clear? Let me ask you to consider this. Does a company's share value have to be $10 million? On the books, it has $10 million in assets and cash. But what if the company were under Donald Trump's name? Do you believe it could immediately be valued at $100 billion? Could each share be worth $1,000? Absolutely. Because when Trump raises capital, people scramble to invest. This is why the reputation of the business owner is crucial. Most businesses around the world operate around money. Here's a common model. You set up a company in your city, say New York, with $10 million in capital. But what if you had a connection with Elon Musk? He might offer you a completely different deal. What does this mean? Here's my advice. Never put assets under your personal name. Then, out of that $10 million, I'd help you find a company to hold $8 million. This service is called nominee shareholding. Have you heard of that term? You might be surprised and ask, why would I need him? But Elon Musk would say to you, every year, I'll charge you a 3 to 5% service fee. That means you'll have to pay me around $300,000 to $400,000 annually. Not to mention, you also need to invest an additional $8 million. So what if I help you find an institution to hold the shares on your behalf? Why would an entrepreneur do such a thing? This was originally my company, but in the end, I only kept $1 to $2 million and handed the rest over to Elon Musk so he could find another company to represent the ownership. Then every year, I still had to pay him $300,000 to $400,000. Why would anyone do that? The reason is simple. If the representative company is called Apple, then the share structure of your company will look like this. Apple owns 80%, and you keep just 10%. Sounds unfair, doesn't it? But here's the thing. Apple doesn't even care about running your company. So why do it? Do you know how many incentives you would receive if Apple were the named owner of your company in a bustling city like New York? If a prestigious company invests in your business, wouldn't other investors be lining up to jump in? Of course they would, because when they invest in your company, they can proudly tell others, "I'm partnering with Apple." Do you get it now? So never assume that the value of money is fixed. Once you convert money into equity, its value transforms. All of the examples above are hypothetical, but it's okay even if you still don't fully grasp them after watching this video. What really matters is this. If your money just sits in your pocket or your bank account, it's dead money. Never try to cling to money, because money never truly belongs to you. What we really need is the right to use money. Only when you release money from your hands does it begin to truly work for you. But letting go doesn't mean wasting it. If you're already wealthy, go ahead and spend to enjoy life. But if you're starting with nothing, then you must learn how to transform money into another form, such as tangible assets, intangible assets, or financial assets, right? And more importantly, use your money to invest in knowledge, because your brain is your greatest asset. Due to time constraints, I'll stop here. The Path to Prosperity offers free content on how to build wealth, start businesses, invest, and achieve financial freedom. If you don't want to miss out, make sure to follow the channel, turn on notifications, and share this video. I sincerely hope that those of you who supported this video will soon reach financial freedom. If even one or two lines from this video bring value to your life, I'll feel truly fulfilled.